Yes, hi everyone. Hi Guru. Is it audio? Is it audible, visible properly? Zubaria. Guru, good morning. Am I audible, visible properly? Please confirm. It's a little cold in Pune. How's the situation in your city state? Ashil. Hmm. Okay. Weather is changing here in Pune. Okay. Even in Bangalore. Yeah, weather is changing. Can we start? Should we start? Even cold in Bangalore. Yeah. There is a sudden drop of temperature here in Pune. So yesterday it was all okay. Today it's a bit cold. Should we start? Yes. 30 seconds and we'll start. Okay. 7:30 we start exact. Time wise, we will not compromise anywhere. Every student, please just say hi, hello, good morning whenever you are joining. Okay, we have 25-30 people here on the app itself. Have you revised supply chapter? Let's start the recording, okay? Yes, so hi everyone and a warm welcome to our next chapter, that is charge. Tell me quickly, have you revised supply chapter? Were you able to go through the things? Fazil, Abhinandan, Darshini, Guru, Uday, Ashil, Harshavardhan, good morning. Revised supply chapter is done, closed. So today we will be doing the chapter of charge. Okay. Yesterday chapter was still a standalone one. Charge involves a lot of interlinking, so you will enjoy today's class. Just stay focused, stay with that energy. Yes, Uday, Seti, good morning. Come on, let's start. So point number one that I want to stress upon everyone is in the charge chapter when we talk about the RCM FCM provisions. Please pay attention now. When we talk about the RCM FCM provisions, I want you to think about exemption first. If there is no tax, then there is no question of who is going to pay tax. Question number one will be whether tax is applicable or not. So wherever the exemption entries are there, for example, like legal services, for example, like GTA services, your step number one in the structured thinking should be whether there is any exemption entry. If the entry is exempt, if the transaction is exempt itself, the question of RCM FCM stands invalid. Yes? Okay. We'll slowly incorporate that in the questions. Come on. As usual, let's quickly start with the questions first. Please don't see the answer. I cannot hide the answer completely in the first page. Pay attention. Panini Private Limited Jaipur agrees to sponsor a sports event organized by Pink City Club in Jaipur. Panini Private Limited has paid an amount of 5 lakh for such sponsorship of the sports event, and consequently the event was named after the brand name of Panini Private Limited. Examine who is liable to pay the tax in the given case. Come on, quickly think and write it, scribble it down in your register. Who will pay the tax in this case? 10 seconds I'm giving. Who is going to pay the tax in this case? In case of sponsorship? 10 seconds, quick, quick. Okay. Okay. Let's start the analysis. Now tell me. First of all, I see a lot of students getting confused in understanding who is the supplier and who is the recipient in case of sponsorship. See, understand, whenever you feel confused about supplier and recipient, just pay attention. Supplier is the person who is going to receive the amount. Recipient is the person who is going to pay the amount. In simplest words possible, whenever you feel any confusion, supplier is going to receive the amount and the recipient is going to pay the amount. Okay. Now, what is sponsorship? Sponsorship is a specific form of advertisement. It is an advertisement in the form of an event. So, for example, I am organizing a cricket match and I go to PNG Jewelers, let's say, and I tell them that PNG Jewelers, you pay me an amount, let's say you pay me 5 lakh rupees. I will ensure that I am giving you the advertisement services in the form of that event. So I will name my event as, let's say, PNG Jewelers Cricket Tournament. All the boundaries for the cricket ground will be named after the PNG. The PNG brand name or the trademark or whatever their symbol is there, that will be laid down on the ground. So basically it's a specific form of advertisement. Now pay attention again here. What are they saying? Panini Private Limited has paid an amount of 5 lakh, means Panini Private Limited is the recipient. Panini Private Limited is the recipient and Pink City Club is the supplier. Now, earlier you used to study that any person in the sponsorship entry for RCM, you used to study any person, but now it has changed, any person other than a body corporate. Now, sir, what is the meaning of body corporate? Body corporate means a company or a LLP. Now, Pink City Club, is it a company or LLP? No. So, supplier satisfaction is fulfilled. Supplier thing is fulfilled. Recipient should be a body corporate or a partnership firm. It's a body corporate, it's a company. So this will fall under the reverse charge mechanism. The tax will be paid by Panini Private Limited. Sir, is there any exemption entry? Because you didn't analyze it. See, there is an exemption entry for sponsorship, but only for specific recognized sporting events like Indian Olympic Association, Cultural Board, Inter-University Board. So the names also we don't learn, we just read those names that will click in the exam that those are recognized sporting bodies. But everything else, the private, the local societies and everything like this club, this is not exempt. Hence, I did not analyze the exemption entry. I directly talked about the RCM FCM. So here the reverse charge mechanism will apply, and as you okay, so almost everyone is correct. Panini. Okay, so Panini Private Limited is going to pay the tax under the reverse charge mechanism. This is absolutely correct. I hope the sponsorship entry is clear. Okay, next question number 2. I want you to quickly analyze. I'm just giving a brief read. Arpan Singhania is an executive director in Z Limited. The company paid him sitting fee of 25,000 for the month of January. Further, salary was paid to Arpan Singhania amounting to 1.5 lakh for the month of January, on which TDS was deducted under applicable provisions of income tax law. Tapasya and Associates, in which Arpan Singhania is a partner, supplied certain professional services to Narayan Limited in the month of January for 2 lakh. Discuss the person liable to pay GST in each of the supply involved in the given case. Take 30 seconds, quickly analyze how many transactions are you able to spot and what is the RCM FCM analysis that you are putting in. Quickly, 30 seconds. Very good. Saundarya, Ashil. Okay. Yeah, seems to be on the right path. Guys, basically there are three transactions here. Transaction number 1 is with respect to the sitting fee. Transaction number 2 is with respect to the salary. And transaction number 3 is with respect to the firm. Sir, firm has the director as a partner. Does it matter? That is irrelevant information. That is not of any relevance to us. Sitting fee is a normal consultancy fee. It will fall under the reverse charge mechanism. Sir, but it is given to the director. Yes, but that sitting fee is given to the director. That is not a part of salary. Salary is separate. Sometimes it becomes a query that, sir, it is given to a director who may be an employee. Yes, but you also have to see what is the amount. Salary is a part of that. As an employee in the course of employment, you are giving him a fixed salary. This will fall under schedule number 3, paragraph number 1. It will fall outside the supply. That is fine, but sitting fee is something you are paying on per meeting basis. That will fall under the reverse charge mechanism. And for the firm, it's a normal FCM case. But sir, firm has that Mr. Singhania as a partner, irrelevant to us. irrelevant to us, that is not relevant for us. Okay, is this clear? So here with respect to the RCM, the technical word they have used is recipient as body corporate, although I feel law should have used the word as company, because the director word is always used in case of a company. In case of LLP, the word used is designated partner or a normal partner. But it's fine. We will use the word as the law has stated that recipient is a body corporate. So for sitting fee, the reverse charge mechanism will apply. With respect to the salary, it is not under GST. It will apply under schedule number 3, paragraph number 1, and TDS has also been deducted. Tapasya and Associates, in which Mr. Singhania is acting as a director, it does not have any impact on my taxability. Normal forward charge mechanism. Tapasya and Tapasya is liable to pay. Pay attention what they are asking exactly. Discuss the person liable to pay GST. So my one-liner conclusion will be not as RCM FCM, but rather I will also write the name of the party who is liable to pay. So in the first case, the name of the company. In second case, it is irrelevant. In third case, Tapasya and Tapasya Associates. Is this clear? Okay. Yes. Done. These are elementary questions. The main questions, the main charts are yet to come. This is not to be done here. Just a simple point reiterating. See, in the composition scheme, there is one rule that applies, that if I have 5 units in my in the country that are registered under my PAN, so if one of the units applies for composition scheme, all other 4 also are deemed to applying for the composition scheme. It is not possible that one of the units is going under the composition scheme and my other units are not going in the composition scheme. You remember the composition scheme, it is 10(1) or 10(2)(a). Sometimes while writing ICR writes 10(2). 10(2) is not a different composition scheme. It is conditions with respect to 10(1). 10(1) basically covers traders, manufacturers and restaurant. 10(2)(a) covers other services. Okay, balance we will have more discussion while doing the questions, but this is the basic section number 10 composition scheme. Whenever you are writing any section, I want you to write the act also, because this is section number 10 CGST. If you do not quote anything, examiner might get confused whether you are talking about composition scheme or you are talking about place of supply with respect to the goods. Is it clear? Okay, so as I was saying, if I have 5 units, all need to go into the composition scheme or all will be under the regular scheme. This is something which is different from the QRMP scheme. In the returns filing QRMP, it is possible that one of the units is going under QRMP and other units are staying under the regular monthly scheme. So this is a difference between composition versus QRMP. Pay attention, it was asked recently in the exam. This is not a big deal. I want you to try to attempt question number 4. This question number 4 has a subtle assumption by ICA. Nivedharni, good morning. Please start question number 4. Have a quick read and try to analyze, then I will start. No, Raghul, partnership firm is not a body corporate. LLP is a body corporate. Partnership firm is a normal firm. Body corporate means section 2 clause 11 Companies Act 2013. That is a normal company, private limited company, public limited company, LLP. They have a separate legal existence. Okay. Have you read the question? Can I start? Mala, we will do it during the exemption chapter, don't worry. Rajbir, a registered person at Delhi, is in the business of selling goods related to interior decoration. ICA is very smart. ICA is very smart. See, how is it writing? Selling goods relating to interior decoration. In the haste of reading, some students read this as interior decoration service. No. It is goods related to a service. So this is 10(1). This is not 10(2)(a). Okay? Please read the question carefully. It is in the business of selling goods under the firm name Rajbir and Sons. He has opted for composition scheme for 22-23. Fine. His turnover for current year 80 lakh. Sir, what is the basic limits? You know, 150 lakhs. 150 lakhs for special state it is 75 lakhs. For service it is 50 lakhs. It is expected to achieve 130 lakhs in financial year 23-24. Discuss whether Rajbir and Sons can still enjoy the benefits of composition scheme in 23-24. Simple, we will write that for composition scheme, state of Delhi, the limit is 150 lakhs. Now please understand, in the composition scheme, you have to analyze and apply the limit twice. First, you have to see the preceding financial year limit. If it does not cross 150 lakh, in current year you are welcome. You are welcome under composition scheme. And in the current year also, you have to again check the limit of 150 lakh, because in the current year you are welcome under composition scheme only till the point the scheme does not lapse. So it is a twice check. First, in the preceding financial year to welcome in the current financial year, and in the current financial year you will stay till the limit crosses 150 lakhs. Twice you have to apply. So seeing 80 lakhs, yes, Mr. Rajbir and Sons. Rajbir, please welcome. Now in the current year till 130, yes, that is also okay. You can stay in the composition scheme. You can enjoy the benefits. 150 lakh, Delhi, section 10(1). Now, sir, do we need to write 10(2) conditions completely here? No. That may be a perfect answer, but that you cannot follow in your exam. You just write the main 10(1) part. You don't need to quote all the conditions of 10(2). As I said, this is not a law audit paper. Okay. Next part is where there is a subtle assumption by ICAI. His son Karan wants to start a business of providing services relating to interior decoration. Now here again ICAI is trying to play with us. Service related to interior decoration. This is a service. After completing post-graduation course in interior decoration under the same firm name Rajbir and Sons with effect from 1st April of 23-24, and wants to enjoy the benefits of composition scheme under GST, advise Mr. Rajbir and his son. Which point are they pointing to? Which law, which point of the law are they referring to? What are you going to apply here? Tell me. Which legal provision we are going to apply here? In section 10(1), am I allowed to give services? See, this is primarily for goods and restaurant service. But what if I want to give some marginal services? Very good. Abhinandan, very good. Where is this point being tested? Second proviso to 10(1). Second proviso to 10(1). What is the limit? Tell me. What is the limit that you are going to apply for marginal services? So if I am dealing under goods, I want to give some minor services. Marginal means a very small limit I want to stay in the 10(1). Had this limit not been there, no. Ram Prasad, we are not going to apply 10(2)(a). We are going to stay under 10(1). I am going to apply marginal services limit. So I will stay under 10(1) and also I will give a little bit of services. And what is that limit, sir? 10% of, tell me. Correct. 10% of turnover in a state of last financial year, or 5 lakh, whichever is higher. People are writing 5%. People are writing 20%. Guys, it's a simple limit that you need to learn. 10% or 5 lakh. 10% of turnover in a state. So I will be talking about my GSTIN. I will not be talking about the aggregate turnover here. So I, as a GSTIN, my last year turnover, 10% of that or 5 lakh, whichever is higher. So if your turnover is very low, Nirmala Tai says, okay, 5 lakh we can give. But if my turnover is very high, then 10%. And this is not going to include interest and discount. I hope you remember it. Interest, discount, income that is exempt under entry number 27. It is not going to be included. Okay. Now there is a very typical assumption ICAI has taken. ICAI is assuming here that when Rajbir's son, Karan, when Karan joins the business of Rajbir, they are assuming that this sole proprietorship firm will be converted into partnership firm. Nowhere the question states this, but your ICAI material takes this assumption, ICAI question takes this assumption, and if it is converted into a partnership firm, the partnership firm will have a new PAN. If it has a new PAN, it is a new entity, it's a new registration, and new registrations last year turnover is nil. So I will be comparing nil with 5 lakh, whichever is higher. So up to 5 lakh, the partnership firm can act. This is a subtle, typical assumption ICA takes, which I'm expecting it to take in the question also if asked. Okay, so see, in the current case, if Karan wishes to join the business, then in that case, the sole proprietorship will need to be converted into a partnership firm and new registration will be required. Why? Because every registration is PAN based. Okay, so here the firm marginal services limit will be 5 lakh because turnover is nil, right? The partnership firm is a new entity. Last year turnover was nil. How can a new company or a new entity have any turnover in the last year? So here the limit of marginal services, that is the interior decoration service, will be 5 lakh. So they, in the first part they stated goods with respect to interior decoration, so that is 10(1). But here they stated services. So I applied the marginal services limit. Sir, what if the cross is 5 lakh? Then 10(1) will lapse. I will have to go under the 10(2)(a). That is the specific limit for the services composition scheme. Clear? I think this was a good question. This was a typical assumption. Okay, this is done. Question number 5. Quickly analyze. This is based on ICA material example. Quickly, guys. Hi Aditya, good morning. Yes, read. Come on. Yes, Aditya, I'm able to see, don't worry. Varun and Arun Associates started a partnership firm of architects. Structured thinking, quickly things should click. Architect means 10(2)(a). In Bhopal, MP. MP means 150 lakhs. But 150 lakh is for 10(1). What is for 10(2)(a)? It's a normal 50 lakh. For services limit, there is no differentiation in any normal state versus a special state. Okay. So just to avoid confusion, I will erase this. On 1st April of current financial year, the firm provides architectural services in MP only. Sir, why is this relevant? The firm provides architectural services in MP only. Guys, this is one of the condition of the composition scheme. One of the condition of the composition scheme is that interstate supply is not allowed. Only intra is allowed. So they are confirming that. They are confirming this thing in the question. It provided the details in the current financial year. They have given quarter-wise data. The firm has obtained registration under section 22, that is liability to registration, from 1st of July, and it opts to pay tax under the composition scheme. Determine the tax liability for the 3 quarters. Now have a very structured approach in your thinking. I started my business April, May, June. The first quarter turnover is 20 lakhs. Will I be paying any tax here? No, sir. Why? What is the limit under 22? What is the limit under section 22 for services? It is 20 lakhs, right? This is not a MMNT state, hence not 10 lakhs limit. Mizoram, Manipur, Nagaland, Tripura, it is not 10 lakh limit. So at the end of June, I will be taking registration. So for 20 lakhs, I will not be paying any GST liability. Please understand everyone, composition scheme is a specific type of GST registration. To think and talk about composition scheme, I will first be entering the GST regime. So in the first quarter, I am not under GST. Hence, I will not be talking even about the composition scheme. Sir, but will 20 lakhs be considered in the total aggregate turnover? Answer is yes. This has been given in your notes. 20 lakhs will be a part of aggregate turnover to check the eligibility and liability to register. But on 20 lakhs, I'm not going to be paying any GST because I'm yet to enter my GST regime. Is this clear? So on 20 lakhs, I'm not going to be paying any GST. At the end of June, my 20 lakh is going to cross. So I come under GST. from the 1st of July, I entered my GST, and now they are asking me that please pay tax under composition scheme. So for this 30 lakhs, I'm going to be paying my composition scheme levy. Now, what is the composition scheme levy? Please tell me quickly. What is the composition scheme levy for services? Is it 1%? Is it 5%? Or is it correct? It is 6%. And whenever I write 6%, I will always quote 3 plus 3 because interstate is not allowed. It's always intra. So 3 plus 3, CGST plus SGST. Is it okay? Never write 6%. A lot of students write directly 6%. It means you are showing it as an interstate. No, 3 plus 3. Okay. And at the end of September, what is the situation? The total is 50 lakhs. So at the end of September, my composition scheme will lapse. And once my composition scheme lapse, I will come into the normal GST regime, that is 9% and 9%. 9% and 9%. Is this clear? How you need to dissect the information? Is it clear? So this 20 lakh, when I was not under GST, it will be a part of aggregate turnover to determine the GST liability, to determine the GST registration liability. But I'm not going to be paying any tax on it. I'm not going to be paying any tax on it. Okay. Everyone, can I move ahead? So quarter wise answer I will be giving. Final calculations I will be giving. Okay. Now in question number 6, just a small point for part number B, and then C and D I will give you to analyze. Part number A is very simple. No need to do it here. Just understand a small point I want to stress upon. In section number 10.1, it is absolutely okay if I'm giving goods and I'm dealing with restaurant services. If I'm dealing in goods and I'm dealing in restaurant services, both are under 10.1, that is absolutely fine. No issues whatsoever. Okay. No need to apply any marginal services limit. Marginal services limit is for other than restaurant service. Just pay attention to this. Clear? Now C and D, I want you to think about it. C and D. Please analyze, please scribble it down. Very important, C and D. Yes, 30 seconds more, guys. Done? Can I start? Now, before talking about anything, I want to cover one small point. These are your hand notes. So some notings I will already be making and some will be the class notings. So I will just make a small note, class notings. Okay. Okay. See, understand, When I talk about eligibility for 10-2A, when I talk about eligibility of 10-2A, I'm writing two statements. I want you to tell me which one is correct and which one is wrong. So one of the eligibility points for 10-2A is I have not opted for 10-1. And one statement I'm writing is I am not eligible to opt for 10-1. Which one is correct and which one is wrong? Is A statement correct or B statement correct? Or both are correct? Tell me. Which statement in your opinion stands correct? This is correct. This is wrong. Your actual opting or not opting for 10-1 is irrelevant. You should not be even eligible to opt. You should not be even eligible to opt for 10-1. This is again a very subtle difference that you need to pay attention to. Okay, this is one of the eligibility points of 10-2, and obviously I know the limit of 50 lakhs for every state whatsoever. Now let's start. Sitaram Associates, registered in Sikkim, is engaged in running a restaurant chain, Veg Kitchen, in the state, that is 10-1. It has a turnover of 73 lakhs in 21-22. Now what happened is that in next year it decided to shut down the food chain owing to huge losses. Now when I shut down the business, I am not even eligible to opt for 10-1. I am not even eligible to opt for 10-1 because I am not conducting any goods business or any restaurant service. So technically I am eligible for 10-2A. I will see the limit, but the first point is satisfied that I am not eligible to opt for 10-1 because I have closed down the business. So I will be starting intrastate architect service. Architect means 10-2A. So primary condition is satisfied that I am not eligible to opt for 10-1. But secondary, I have to see the turnover limit. For turnover limit, the first step is seeing the last year turnover. Sir, but the last year turnover was with respect to 10-1 business. Guys, I have to see aggregate turnover. Aggregate turnover can be of 10-1, 10-2, 10-2A. I don't care anything. So aggregate turnover last year was 73 lakh, which is crossing 50 lakh. Hence, in the current year, I am not allowed to go for 10-2A because the limit has been breached. Had this limit had been the turnover instead of 73 lakh being 43 lakhs, I would have been eligible under 10-2A. Are you able to understand? See guys, conclusions many people are able to reach correctly, but your analysis and your path to the conclusion matters when you write exam answers. Structured thinking. That's why I say first think about first step, then second step, then reach the conclusion. Okay. Next, Deepti Services, registered in Uttarakhand. Uttarakhand is a special state, but let's see whether it is 10-1 or 10-2A. It is exclusively providing intrastate hairstyling. Okay, so in intrastate hairstyling means it is 10-2A. 10-2A does not matter. The limit is 50 lakhs. It has a turnover of 34 lakhs in 21-22. Okay. Is this eligible under 10-2A? Yes. Primary question, they are asking about composition scheme. Eligible, no problem. Will your answer be different? Now this is the second part. Will your answer be different if Deepti starts intrastate supply of beauty products along with providing hairstyling services in next year? Now this is again not directly mentioned in the law. We have to understand ICA assumption. This is an ICA treatment. What is happening? Had the reverse situation been there, I was doing 10-1 and then I want to do 10-2A, not allowed because I am eligible under 10-1. But here I am primarily first registered under 10-2A. I am primarily first registered under 10-2A, and tomorrow in next year I start the dealing of goods. So will that condition apply? Answer is no. That condition would have been applied if first I was dealing with 10-1 and then I want to opt for 10-2A, not the other way around. I am already there under 10-2A and now I want to start dealing of goods. There is no restriction in law. The restriction is when I want to enter 10-2A, not when I am already there in 10-2A. This is a subtle ICI treatment. Again, important to note. So C and D are important and I have covered. Avasthi, is this clear? ICI has marked this as allowed. The answer will remain same since it fulfills the conditions of 10(2)(a). So till the point it does not cross 50 lakh, I am allowed. Okay. Question number 7, I am going to be solving. I am pretty sure that every one of you must have solved this some point or other in your life. So what I will do, I will give you just 1 minute. Just go through the question quickly so that when I start solving, you are able to connect the dots. Okay. Go through the question. Go through the question. You can make some basic analysis if you want. Then just read it. This is the bill book and this is the below point. Read the question also carefully, what they are asking. Please confirm once read. Done. Now, I'm going to be analyzing the question completely, and guys, there might be 1 or 2 questions that are very practical oriented. So what I want you to do after understanding the question at home, after when you revise things, maybe it will take 5 to 8 minutes. But those 1 or 2 questions I want you to write end to end along with the table forming so that you are thoroughly clear with that question. Some questions are there where you will need to do it again. This is one of those. A lot of concepts will be mixed. I will analyze all the points. Okay, let's start. B&D company, a partnership firm, okay, Maharashtra, okay, is a wholesaler. So it's not a manufacturer, it's a trader. Okay, trader of a taxable product P and a product Q which is exempt by way of notification. Okay, one is taxable, one is exempt. The firm supplies these products only and only in the eastern part of Maharashtra. So I'm not making any interstate sale. So one of the conditions of composition scheme need to be seems to be complied. All the procurements are from the suppliers registered under regular scheme in the state of Maharashtra. So okay, purchases does not matter much when I'm talking about the composition scheme because I'm not going to be getting any ITC. You know, right? Composition person does not charge GST, doesn't get ITC. The firm pays tax under the composition scheme. Very well. It has furnished the following details with respect to the turnover. P and Q. Q is exempt. Q is exempt. Okay. But tell me one thing. Will this be a part of the turnover? Will Q be a part of turnover? Yes. And sir, when you're saying Q is exempt, will that also matter in the composition scheme? Will that also matter in the composition scheme? We will see. We will see. The extract of the bill book, now at the end they have given till September, okay, and June, September, and for the month of October they have given me the bill book. Okay. Further, B&D company paid freight of 1,40,000 to a GTA during the period of April to October. So April, May, June, July, August, September, October, 7 months I have paid 1,40,000. Assume equal amount of freight is paid each month on 10th of each month. Okay, we will analyze this. Assume that the goods for which the freight is paid on 10th are transported between 11th to 20th of the month. Okay, all amounts are exclusive of taxes. This is one of the base information that we need to follow. That always check in the question if any amount is inclusive of tax. Subtle mistake can cost you your marks. Compute the GST liability ignoring the ITC of the company for April to October. So I have to focus on my 7 months, but only under the composition scheme, showing calculations for each quarter. So I have to talk about composition scheme, plus I also have to talk about quarterly. So quarterly means April, May, June, July, August, September, October, November, December. 3 quarters I will be focusing upon that exist in my question. Make suitable assumptions wherever required. The rate of GST is 2.5% each, means somewhere this is going to go under the reverse charge mechanism. And GTA has not opted to pay tax itself. GTA is not opting for FCM. That is one of the options, okay? That GTA has an option of FCM, but not opting for it. Stock is at the valued cost price. Okay. Let's start the discussion. For a trader, what is the rate of composition levy that you pay? Sir, I pay 1% of what? I pay 1% of? Tell me. I pay 1% of what? Exempt or taxable turnover? Manufacturer and trader, there is a difference. Manufacturer pays 1% of turnover in a state. I pay 1% of taxable turnover in a state. So here I am going to be paying only on P. I am not going to be paying anything on Q. But Q will be a part of aggregate turnover. Sir, what is the limit for Maharashtra? Maharashtra limit is 150 lakhs. It is 150 lakhs. All the basic conditions seem to be complied. I am not making any interstate sale. Now pay attention. Let's calculate whether my turnover is exceeding 150 lakh, because question is giving me date wise bill book, means somewhere the scheme might be lapsing. Now let's start the turnover limit. For the first quarter, P plus Q. Q will be a part of the aggregate turnover always. Okay, aggregate turnover means everything, taxable, exempt, zero rated, anything that you can think of is a part of aggregate turnover. So 60 lakhs plus 17 lakhs, 65,000. This is 77 lakhs, 65,000. Next, 50 lakhs plus 17 lakhs. This is coming out to be 1 crore 44 lakhs 65,000. Next, now in the month of October, day wise I will start, because somewhere or other there will be one date when 150 lakh is crossing. I can apparently see it. I have already reached 1 crore 44 lakh limit. So approx 6 lakh more. 1st October total sale is 2 lakh 3,000. Okay. Next is 138 250. Okay. 1 crore 48 lakh. Next is 106 250. This is 1 crore 49 lakh 12,500. So now at this point of time, obviously 92,000, it is going to breach 150 lakh plus 92,500. This will cross 150 lakh. It is 1 crore 50 lakh 5,000. So this is my cutoff point. This is my cutoff point. Here my composition scheme is going to lapse. So when they are asking me to calculate the tax under composition scheme under quarterly basis, what will be my table look like? The table will look like this. Pay attention. April to June, April, May, June, July, August, September, and in the month of October, I will be showing only 2 dates, 1st October and 2nd October, because 3rd October, I am going to go into the regular scheme. So understand the question requirement. Is this clear? The table is clear. Now, let's start with the basics. How much tax I will be paying? I will be paying my 1%, that is 0.5 and 0.5 on 60 lakhs. For quarter number 1, not on Q, because I am going to be focused on taxable. Had this been a manufacturer, I would have been paying on 60 lakh as well as 17 lakh 65,000. So for the April, May, June, on 60 lakh, 0.5% and 0.5%. Sir, can't we show 1%? No, you cannot show 1%, because then you are denoting that you are making interstate sale. No, that is wrong. 0.5 and 0.5%. Similarly, for next quarter, 50 lakhs, 0.5% and 0.5%. Now for the month of October, only on 1, 2 and 3, only on the product P. So 2,136,67, 2,136,67, 0.5% and 0.5%. This is my step number 1. Can everyone give me a thumbs up till this point? Everyone is on the same page with me? Any query, please ask. Yes, I'm waiting, guys. Everyone on the same page with me? Okay. So clear, right? Till this point, everyone is clear? Done, 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 done. Okay. Now next part I will analyze is with respect to this. The RCM liability. Sir, what is the meaning of assume equal amount of freight paid each month on 10th of each month? Even if this line is not mentioned, I would have done 140 divided by 7. I would have done per month calculation as 1,40,000 divided by 7. There is when I divide 1,40,000 divided by 7, there is an inherent assumption that every month equal amount is paid. Because see, in real life, it is possible that in April month, I am paying 1 lakh. And in, let's say, in October month, I am paying the balance 40,000. Or maybe in 1 month, I am paying more, 1 month, I am paying less. So they are saying you assume equal amount. So 140 divided by 7, I assume 20,000 per month. I assume 20,000 per month. That is a reasonable assumption. Even if the question doesn't state this line, I am going to be assuming the same. Now, with respect to this GTA, it has not opted for FCM. Hence, I have to go under RCM. Sir, I am one of the specified recipients. You know specified recipients. GTA, I will be analyzing it. Don't worry. So, GTA specified recipient is a registered person. So, registered person has to pay tax under RCM. And the rate is always 2.5, 2.5. If the GTA goes for FCM, it could have gone for 12% or 5%. That is the choice of GTA. But here it has not opted for FCM. So 2.5 and 2.5, not 5, 2.5 and 2.5. I will be taking it in intra manner. Now, pay attention. This is my outward supply. This is my RCM liability. Now, what will be my RCM liability? I am talking about 3 months. So 20,000 is per month. 20,000 is per month into 3. That is for the quarter into 2.5% and 2.5%. Similarly, 20,000 into 3, it is 2.5% and 2.5%. Now, will there be any liability for the month of October? Answer is nil. Sir, why? Pay attention. The GTA transaction I am entering in on the date of 10th. Even if you apply time of supply provisions, although they are not needed in detail here, but even if you try to apply the time of supply provision, the date will fall after 3rd of October. Basically after 2nd of October. On 3rd October, I have gone into the regular scheme. So the GTA transaction for the month of October, it is being entered when I am into the regular scheme. And the question is asking about composition scheme. Hence, no liability with respect to the RCM in the month of October. No liability. Nil. This is my analysis. Now, sir, how will we make the table? Exactly like I have made. Just a little bit more formal. I will show you. Turnover of P, first quarter, second quarter, third quarter. In the third quarter, you can write 2 dates. It's absolutely fine. First one I took 60%, 0.5%, 0.5%. P, again the same. And these are the 3 entries. Then with respect to GTA, I told you 60,000 into 2.5%, 2.5%. See, 60,000 into 2.5% and 2.5%. Similarly, here also. But here it is nil. Why? Because the question is asking about composition scheme. And in the month of October, when the GTA entry is being entered, it is in regular scheme. At the end, you just have to make a total so that this matches with the ICI answer, because the question is asking total liability. So this plus this. So total 60 and 60, this will be the total. Now, please pay attention to the dates. 1st April till 2nd October I have written. Just to clarify it again, that from 1st April till 2nd October, because on 3rd October it is the lapse date. Now, sir, How many legal provisions do we need to quote? Whatever we applied, we need to quote. We have to mention about the composition scheme. We have to mention about the 150 lakhs. We have to mention about me being a trader. So the 1% will be of the taxable turnover P. We have to mention about the lapse date analysis. We will put analysis paragraph and we will write that okay, on this date the turnover is crossing. Nothing else. You don't have to learn. This is not a law audit paper. Whatever you are applying, just write it. See, basic composition scheme. Aggregate turnover is something that you can try to define. Why? Because I am including Q also. Then basic analysis, 3rd October date, GTA, RCM part. Okay. So RCM part, and then I start my calculations. That 3rd October is my date. If the question tomorrow tweaks and mentions instead of the wholesaler, they write a manufacturer. Everything will be same. Only I will start paying tax on Q also. Now at home, it will take max to max 7 minutes for you to solve. I want you to do it today. Great, Abhinandan. Yes, that is the point. That is why we are doing this batch now. I want you to have that structured thinking. Everything in the question has to give you some analysis. So the next time you start reading the question, you will have all these points engineered in your mind. That okay, this is Maharashtra, okay, so 150 lakh, okay. So trader, manufacturer, okay, 1% will analyze. Clear? This similar question is going to hit us in ITC also. At that time, we will see the ITC provisions. Great. Come on. Question number 8, please try to solve. Do it. Question number 8, quickly. 1 minute. Yes, 10. Come on, let's start. Shubha Lakshmi Foods is engaged in supplying restaurant 10-1, Maharashtra 150 lakh, okay. 21-22 turnover of 140 lakh, okay, 150. Further, it earned bank interest of 20 lakh from the FD in the said financial year. You are required to advise whether it is eligible for the composition scheme in 22-23 under 10-1. So the first part of the question is whether I am eligible in next year. For seeing my eligibility, I will be seeing my last year, that is 21-22. Now, what is my aggregate turnover? In aggregate turnover calculation, you have to take everything. So it is 140 lakh plus 20 lakh, that is 160. But sir, in composition scheme specifically, for the purpose of determining the eligibility, interest discount is excluded. In the entire chapter, interest discount is excluded. I am taking the marginal services limit, interest discount is to be excluded. For paying the composition levy, interest discount is excluded. And for checking the eligibility also, interest discount is excluded. This is something you can think of. Make a point of this. Everywhere interest discount is excluded in the composition part. So this will not be included. It will be 140 lakhs. That is not crossing 150 lakhs. Hence I am eligible. Just this thing you have to put it in words. This is the first part of the question. Second, further means now they are asking your second part. Assuming in the 22-23 turnover is 130 lakhs. Sir, but right now they said 140. That was a separate question, guys. That was a separate. This was about the last year. Now they are asking you about next year. That turnover is 130 lakhs from the supply of restaurant service and 10 lakh from the supply of farm labor in Maharashtra. It also earned bank interest of 30 lakh. Compute the tax payable in financial year 22-23. I know many of you might have done 130 plus 10 into 1% or that 5%, whatever the case may be. Here it is 5%. But before that, Did you take a step back and analyze whether this is under the limit of marginal services or not? Tell me honestly, how many of you analyze whether firstly it is under the limit of marginal services or not? Because for 10.1, I have to check the limit of marginal services last year into 10% or 5 lakh, whichever is higher. This is your step number 1. Without this, how can you calculate tax? First, you have to determine the eligibility. So here, the last year turnover was how much? The last year turnover was 140 or 160. Sir, you told na interest discount exclude everywhere. So it is 140 into 10%. 140 into 10%. Or 5 lakh, whichever is higher. That is 14 lakhs. Now I analyze that, okay, the supply of farm labor is a service. This service is 10 lakh, which is very well under the limit. So yes, I am eligible to continue under 10.1. Now you talk about paying the tax. Now paying the composition levy, also interest discount is to be excluded. So I will be paying on 140. Another mistake area, that you do not pay composition levy. You do not apply composition levy on the marginal services. Guys, Nirmala Tai has allowed you marginal services limit, but obviously you are going to pay tax on it. So 10 lakh is allowed, but you are also going to be paying tax on it. At what rate? The primary rate. So here the restaurant is the primary 10.1, 5%. I will apply 5%. And obviously divide by 2 CGST, SGST. So 3,50,000 and 3,50,000. Two mistake areas I am pointing out again. Step number 1, please analyze the limit. Step number 2, don't forget to apply 2.5 plus 2.5 on 10 lakh as well. So you are allowed the limit, but dear, you have to pay the composition levy on it. Now this you just have to explain in your own words. You cannot learn this everything. 350 is your main answer. Okay. Next, I am not going to be solving this. It is not very important. Just a small point to be noted. Here they have given you first quarter 10 lakh. It is a firm of chartered accountant, means 10 to A. So 10 lakh they have given for first quarter. Second quarter they are giving 20 lakhs. So somewhere I need the cutoff date of 20 lakhs. After 20 lakhs I will be getting registration. If you see first quarter it is 10. Second quarter it is 20. So where did it cross 20? Because 10 is covered already. So they have given threshold is crossed 20 lakh on 1st August. So July, it would be 10 lakhs. So 10 of July and 10 of first quarter, it is 20. And then balance, it will be 10 lakhs more. Just a basic bifurcation. It's about reading the question carefully. So once you get into the GST registration, you will go under the composition scheme. You will pay 3% plus 3%. So sometimes they may give you information in a little bit different manner. Don't get scared. Read the question. Yes. This I won't be doing. It's very simple. Question 11. Pay attention. I'm just making a small note with respect to the important portion here. Then I will show you the table and you will be calculating it. I am not going to be calculating it. All in one partnership concern. Partnership. It is registered under GST and regular scheme for the month of March. Okay. So it is registered for the month of March you are calculating. This is the table of outward and inward supply. Please calculate the total GST liability. I want the correct GST liability answer. Quick. Done? Can I solve? Give me the total GST liability quickly. Give me the GST liability, someone. Okay, let's see the figures. Two are not matching. One is 46,000. Okay, let's see. Let's see. Now I want to give you a small part of understanding. Please pay attention, everyone. See, either it will be a outward supply for me, or it will be an inward supply on me. Outward supply can be under FCM or RCM. Inward supply can be under FCM or RCM. My outward supply under forward charge mechanism is my what is this line here? My outward supply under FCM is my GST liability. My outward supply falling under RCM is GST liability of the recipient. It is not my GST liability. Inward supply that I am taking, if it is under forward charge mechanism, it is a supplier's liability. It is not my liability. Inward supply falling under RCM is a recipient's liability, so it is my liability. Is this clear? And apart from that, be it FCM or RCM, both will be analyzed for the purpose of ITC because it is an inward supply. ITC for me. ITC for me. And whenever you are solving any question with respect to the RCM, FCM provisions, always pay attention to the structure of the entity. What is the incorporation? Is it a company? Is it an individual? Is it a partnership firm? That will matter. This is one part of the understanding. Now, sometimes the question is very kind enough. It will give me the outward supply separately and inward supply separately. But sometimes it will give you mix and match. So pay attention. Is it an outward transaction or is it an inward transaction? Am I paying something? Am I receiving something? This will help. Clear? Now let's come to that question. Now it is a partnership firm. It is registered. It is registered. Direct selling agent service to Y Bank Limited. Now this is my outward supply, but for DSA the RCM is applicable only when it is a case of individual. I am a partnership firm, so this will not fall under RCM. This will fall under forward charge mechanism. Now they are asking you for the GST liability. Inward and outward all are intrastate. Read the question carefully. All are the intrastate supplies. Rate for outward inward is 9% each, except renting, which is 2.5% each. So here it will be 9% and 9%. Provided security service. Now tell me quickly, in security what is the RCM provision? In security what is the RCM provision? Supplier is other than body corporate. And recipient is what? Registered person. Except registered solely for section number 51 TDS or composition scheme. Sir, please explain the body corporate. So guys, simple. Body corporate means company or LLP. This is a partnership firm. It is not a body corporate. So yes, supplier is fulfilled. Recipient is P Limited, a registered person. Another point of mistake. When I am saying a registered person, it can be a company, it can be an individual also. And when I say other than body corporate, I am not talking about the registration status. Some reasons for RCM are on the basis of registration. Some are on the basis of constitution. I am other than body corporate. Tomorrow I might be registered, and in this case I am registered. But still RCM will apply. Because the RCM entry doesn't talk about registration. It is talking about body corporate or not body corporate. I am not a body corporate, but I am registered. It is irrelevant. This will fall under the reverse charge mechanism. It will not be my liability. But in second case, PSR trust is unregistered person. My analysis is not about trust. My analysis is about unregistered person. Because I have to see recipient's registration status and I have to see the supplier's body corporate status. If both fall under the RCM, you will put RCM. If one of them doesn't get complied, FCM. So this will be FCM. 9,000 and 9,000. Next, renting of motor vehicle. Tell me, in renting of motor vehicle, what are the conditions for RCM? What are the conditions of RCM? 5% rate, supplier other than body corporate, and recipient body corporate. So supplier other than body corporate. So, but I am registered. I told you now, I am not going to see my registration status. I am other than body corporate. Let's see the recipient. Provided renting of motor vehicle for transportation of passenger. Yes, it is a hiring service. It is a hiring of motor vehicle to Amaze Tours Limited. It's a body corporate. And value of supply included cost of fuel. This is one of the procedural conditions for RCM to apply. This will go under the reverse charge mechanism. Not my liability. Next, I have given the same condition, same transaction to a CA firm. CA firm is not a body corporate. Hence, normal FCM will apply. One of the three conditions not fulfilled, RCM will apply, normal FCM will apply, and rate, please pay attention, 2.5 and 2.5. Silly mistake area. Availed representation service from PB and Co, a law firm, towards a consumer court case. Sir, service by lawyer is exempt when it is not a business entity. It is a small business entity. Small business entity means previous year turnover does not cross registration threshold. So not a business entity, small business entity, same fraternity people. You remember this or not? Sir, what is the meaning of business entity? Business entity means any person, individual, HUF, firm, company, any person who is providing business activities. So not necessary that business entity has to be company. Body corporate is company LLP. Business entity is any person doing business. And what is one of the other exemption? It is a government related people. CG, SG, Union Territory, Local Authority, Governmental Entity. GA and G, Governmental Authority Entity, I will cover in exemption chapter. Let's focus here. A law firm has provided services to me. I am a partnership firm. So I am a business entity providing services. So sir, I have to check whether I am a small business entity or a big business entity. This is our term, small and big. You don't have to write this in exam. Small business entity means the last year turnover does not cross the registration threshold. Sir, but it is not given in the question. Read the question again. The all-in-one commenced its business from February. And I am talking about March. So this is the 1 year. Last year, I was not under incorporation. I was not a partnership firm functioning. I was not there. So my last year turnover was nil. Hence, this will be exempt. This will stand exempt. Now, whenever I will make any table with respect to the GST liability will be like this. Particulars, value, GST. So here CGST and SGST. First, A, outward transactions, so that your structured mind will accordingly pick up the transactions. When I am talking about outward, I will ignore the inward transactions. B, I will cover inward transactions. Total, I will cover A plus B, and I will put the value of GST. Examiner will start with this first, and you will get your marks. If in paper you don't get time, at least make vertical lines. Horizontal lines you can skip, but at least make vertical lines. This will take 5 seconds, but it will change the outlook of your answer. Shruti, direct selling agent is RCM only? No, Shruti. Direct selling agent is RCM only when it is given by an individual. See the table. First, outward supply. Direct note, FCM because supplier is partnership firm, not an individual. You don't have to write the complete thesis, just the main part. Inward. Now they have given so much detailed answer. It's fine. You don't have to give this much detail. It's the business started the business was started in the current year. Previous year turnover was nil, so it does not exceed the threshold. Current year law firm service will be exempt. This will go in maximum 5 lines in our question paper. It's fine. So for inward supplies it is nil. Outward supply related it is 46,000. You can mention a total also 46. Feeling a little bit more confident? This is one of the areas where a lot of structured thinking needs to happen. Question 12 I'm not doing, it's very simple. This is also very simple. They will ask manufacturer or trader. The only difference is manufacturer 1% of turnover in state. Sir, why in state and not aggregate turnover? Taxes payment happens GST wise. So turnover in state. And eligibility, liability to register, QRMP eligibility, everything happens as per aggregate turnover. Because real life filings, returns, everywhere you pay taxes as per turnover in a state. But limits, eligibility, you check as per aggregate turnover. Trader, it will be 1% of taxable turnover. That is the only difference. This is one question number 14. That is very simple. But one typical treatment ICI is doing. Here they are asking you to compare composition scheme and normal scheme. Simple, you take sales minus cost and profit. Sales minus cost and profit. There are 2-3 points I want to stress upon that you may commit a mistake in. In composition scheme, whatever my purchase is on which I will be paying GST, it will become a part of cost. So ITC you will not get. Another point to be noted, in the normal scheme, let's say my sale value is rupees 100 and my total purchase value is rupees, okay, ignore the sale and purchase, that is simple. Let's say I have charged GST as 100 and my ITC is 60. So balance 40, is this a part of your cost? Answer is no. It is an indirect tax. You are collecting and paying. I am paying 18%, let's say, on my teaching services. It's not my cost, it's yours. I'm collecting it from you students and then I'm paying to Nirmala Sitharaman. So this will not be a part of cost. This GST will be a part of cost. And one another point I need you to note, they have written a transaction here of outward supply of goods to unregistered customer. Sale price includes the GST and they have given 90 lakh. So obviously when I talk about normal scheme, I will exclude the GST part from 90 lakh, divide by 112%. That is okay. But when I talk about composition scheme, now what my obvious answer would be, my first thought will be in composition, I have to exclude the GST part because I'm not going to be charging anything. So my base value of sale should be there. But this is ICI typical treatment where what ICI is doing, in composition, it is completely excluding GST part. It is ignoring it. And it is assuming that if it was composition, then my normal sale would be 90 lakh and GST is not there. Generally, you will take 90 divided by 112. Every student does that. But this is ICI treatment. You have to take 90 lakh in the sale value and completely ignore the GST. This also you need to do it at home once. Otherwise, you will not be able to understand what I'm trying to say here. These are the pitfalls. These 3 pitfalls are there, but you have to solve it at home once. Just you have to make a profit and loss statement. Composition, regular, sale minus cost, profit. Whichever is the higher profit, I will go for that option. These are the expenses. Another point to be noted, everyone. I am buying from registered or unregistered. I am buying from registered or unregistered, it is very much relevant while analyzing things. Sir, why is it relevant? Because registered person will be charging me the GST. Unregistered person will not be charging me the GST. And sometimes they will give you, I am selling to unregistered versus registered. Irrelevant. Why? Because when I'm selling, I have to see my status. I have to see my status, that whether I'm registered or not. I don't have to see the recipient status, because their ITC and what they are doing it, I don't care. When I'm talking about my liability, my status is relevant. But when I'm buying, I have to see, because this will impact my ITC. And here there will be no GST. Is this clear? Is this clear? Monica, which part? Just try to solve the question, Monica. Any query you put it on the Telegram, I will give you the answer. Don't worry. Or any specific line, please ask. I will explain again. Balance students, is this clear? You have to note what relevant information is for me and what I have to discard while reading. They give you this kind of information. You have to note that what is relevant for you. Okay. Okay, done. Now, next question, the last question. I want you to read this. Yeah, Aditya, please mention the doubt. Then I will clear. Balance students, start reading this. Then I will discuss this. Just take a read properly what the question is asking and what the question is mentioning. Yeah, Aditya, please put in the doubt. I will clear. Okay, Monica, if I am under composition scheme and I am purchasing goods including GST, that GST will be a part of my cost because I am not allowed to take ITC. Monica, got it? Composition person cannot charge the GST and cannot take the ITC. Aditya, in simple words, that 90 lakh includes GST. You have to understand that note only for regular scheme, not for composition scheme. Composition ICI is completely ignoring the GST part. Yes, in a way, Aditya, yes, that we cannot charge GST. It is completely ignoring the GST part. It is assuming my base value is 90 lakhs. Some alternative assumption is possible, but we will ignore that. Read the transactions undertaken. Read the question requirement. Question red. This red mark is the important symbol, okay? Important questions. Let's start. XYZ Limited, New Delhi, manufactures biscuits under the brand name Tasty Picks. Biscuits are supplied to wholesalers and distributors across India on FOR basis. What is the meaning of FOR? Means for recipient it is free on road. So I am bearing the transportation cost. I am bearing the transport cost. I have to get the transport arranged, and one cumulative price will be paid by the recipient. So across India on FOR basis from the warehouse located in New Delhi, the company uses multiple modes of transport for supplying the biscuit to its customers spread across the country. The transportation cost is shown as a line item in the invoice and is billed to the customers with a markup of 2% on the total amount of freight paid inclusive of taxes. What are they mentioning? That whatever the transportation cost is, that will be shown in the invoice, and I'm going to bill that to the customer because he's going to pay me one cumulative price. So transportation cost also I will bear and I will take it from him. He will pay me one cumulative price for that. On the transportation cost, I'm marking up it by 2%, means if I'm incurring 100 rupees of the cost, then I will be charging 102. And the markup they are mentioning is on the total amount of freight inclusive of taxes. So on 100, let's say the cost was 100, on which there was a GST of 5. So I will be doing 105 plus 2%. Inclusive of taxes, I'm going to mark it up. So I will mark up the GST portion also. Let's see. Flour used for the production process is procured from vendors in MP on ex-factory basis. What is ex-factory basis? Ex-factory means the supplier is going to get the goods ready at his factory. Again, I will be incurring the transportation cost. Ex-factory for recipient will pay the transportation cost. Supply on FOR means again supplier will pay the transportation cost. You have to see the words very carefully. Here I am buying on ex-factory means I am going to incur the transport cost. Above I am selling on FOR means I am going to incur the transport cost. When I am supplier, when I am recipient. The company is engaging GTA to transport the flour from the factories of the vendors to its factory. So this is my raw material. Now, the company has provided the following data for transportation of biscuits and flour. So this is my raw material and this is my output. This is my output. Okay. For sales, purchase, local purchase and transferring biscuit, there are 6 to 7 transactions. And what they are asking, based on the particulars above, compute the total GST which is payable on the amount paid for transport by XYZ when it avails the services of different transporters. Are they saying the GST liability word? Now pay attention. Are they using the word liability or are they using the word payable? They are using the word payable. So payable means it can be FCM, it can be RCM. FCM, I am going to pay GST to him. RCM, I am going to be depositing directly to the government. But in either case, I am paying GST. RCM, FCM only changes the equation of who is paying. It does not change whether GST is payable or not. So here students get entangled in RCM, FCM. Not required. I mentioned in the notes but not required. Because regardless of RCM, FCM, still I am paying GST. Is it clear? Had they asked what is the GST liability, I would have focused on RCM and FCM. But when they are asking not liability but payable. So this payable means either RCM or FCM, but I am paying it. At the end, I am paying it. Then they are asking GST on transportation cost billed by the company to the customers. The rate of GST on transportation of goods and biscuit is 5 and 12%. So transportation it is 5% And this is not transportation of biscuit. This is a biscuit rate because this is my output. This is my output, that is 12%. A lot of question understanding is required here. Now I will start the analysis of the transaction. For sales within NCR, the company arranged a local minivan belonging to an individual and paid him 54,000. Will there be any GST implication here? Tell me. Do you think there will be any GST implication on this particular transaction? Answer is no. Why? They have written it's an individual. It is not a GTA. No mention of consignment note. So, transport of goods by road, except GTA and courier are exempt. So first, no GST. RCM, FCM is irrelevant. I'm not going to pay GST. For sales to location in distant states, the company booked the goods by Indian Railway and paid a rail freight of 317. Will there be any GST implication? Answer is yes. Normal FCM GST. FCM, RCM I'm mentioning otherwise, not required for our answer directly. FCM will apply and GST will be applicable. For sales to locations in the neighboring state, the company booked the goods by road carrier GTA and paid a road freight of 3,73,000. Out of the total sales, goods worth 10 lakh were booked through GTA, which paid tax at 12%. Freight of 73,000 was paid to such GTA. What is the meaning of this? 73,000 and 3 lakh. This is the freight distribution. Sir, what is the implication of 12% for 73,000? 73,000, it is 12%, means this would be under FCM. In FCM, the GTA has an option of 5% or 12%. He goes for 12% when he needs the ITC. That's his business decision. Question will always tell us. So this will be 12% and this will be 5% RCM. For purchase of floor from MP, the company books through the goods by the GTA and paid road freight of 55,000. Tell me, will there be any GST implication or what is the rate of GST here? What will be the rate of GST here? Tell me. Correct. Guys, this is exempt. A missable point. You remember entry 20 and 21? Agricultural produce, manure, registered newspaper, calamity relief, defense equipment, flour, salt. It is exempt. Butter is not exempt. So GTA you are paying road freight, normal GTA 5% will apply. For local purchase of baking powder, not exempt. Single carriage road freight paid 1500. Now please note, if someone has done GST 2 or 3 years back, there was an exemption for single carriage freight not exceeding 1500. Now there is no such exemption. You apply normal GST 5%. For transferring the biscuit to one of its sister concern, the company booked the goods through GT and paid a road freight of 40,000. Normal GST will apply. Now your first table will be about GST paid. Particulars, value and GST paid. First one was exempt. Second and third, with respect to the railway mechanism, this is okay. GTA 3 lakh, you applied the RCM part, that is 5%, and for 73,000 it was forward charge mechanism 12%. Floor I exempted, but butter you taxed it, 1500 you taxed it, sister concern you taxed it 5%, your total will match. This is the first table. That when it is availing the services for different transporters, and I am using the word availing, this can be to transfer my output. This can be to transfer my output, that is on FOR basis, and also for my inward purchases from different vendors, that is happening on X factory. So here also it is my responsibility. But the question is focused on payable, not on word liability. Liability would have changed the answer. Liability means I have to pay. I have to pay and deposit to the government. Payable means either you pay or I am paying under RCM, but I have to pay. Very important question. Now second, pay attention. They are asking about the GST charged on transportation costs billed by the company to its customers. So when I'm talking about billing to customers, I'm going to be ignoring my purchase transactions. This is not I'm going to bill. Billing is this sales. Sir, last one is also sale. Biscuit transfer to sister concern. But I will be taking a subtle assumption here that when I'm giving to sister concern, there will be no markup. That will be a simple assumption. You have to note it. IC has taken as an assumption that for sister concern, I won't be marking it up. But for balance, marking up will happen. So for example, in first case, here the total, what is the total value? What is the total? See what they are asking about markup. Markup of 2% on total freight plus tax. So in first case, what is my total freight? 54,000. What is tax? Nil. So 54,000 plus 2%. See, first 54,000 plus 2%. First we will calculate just the markup. 54,000 plus 2%. 55,080. Okay. Next, just calculate the markups first. Second, for 317 I am paying my GST also. And on this entire portion, I will be marking up 2%. Because the markup is on inclusive of taxes amount, this is one mistake area. So when on 317 I am paying, my 15,850 as my GST portion. So this is 332,850 on which I will be marking up by 2%. See, this is the total plus 2% markup 339,507. How come you are reaching this? You paid 3,17,000. You paid 5% as GST, 15,850. This is the total, 332,850. And on this 2%, 339,507. Similarly, next, these are the sales. So 73 plus 12%, 3 lakh plus 5% plus overall 2%. Balance ignore. This is purchase. You are not billing this to the customer. Sir, this is the markup amount. This 33507, I am taking one example out of 4 entries. This is your markup amount, means this you are charging to the customer. This you are charging to the customer. Yes. What will be the GST on this? What will be the GST on 339,507? Because this is a line item in the invoice. 5% or 12%? 12%. Composite supply. I am selling the biscuit and I am giving the transportation service for which I am charging 339,507. So on this 12% of GST will apply. Last column is about GST. So 339,507 into 12%, 4741. I ignored the last transaction. I am assuming no markup. So I took my first, that was without any GST. So this, then railway, and then the transportation, 3 and 73 I divided. And I will put a clear note that assume that no markup on transportation cost to a sister concern, because it is not a technically a customer. And it is not technically a sale happening. I'm just transferring it. Okay. This is an assumption. I'm just transferring it. I'm not selling it per se to a third party customer. So no markup, no sale, nothing. This, unless and until you make the table. I have explained each and every transaction. But unless you make the table, you commit some mistakes. I'm guaranteeing you won't be able to crack it in the exam. Guaranteed. This was all for the composition thing. One small note, sometimes in the question they ask support services related to restaurant like booking table. This is not a restaurant service. So here 10.1 will not apply, 10.2a will apply. Clear? Yes? Feeling a little bit more confident? New questions are yet to take place. Some touch up needs to happen more. But I think you're confident. So we'll take a 5-7 minutes of break. And then we will resume. Okay, take a short break. Aditya, the split of 3,73,000 is basically one part is under FCM 12% Other part is normal RCM 5%. The GTA has an option that if he wants to go under FCM, he can charge 5% or 12%. 12% when he wants ITC, 5% when he doesn't want ITC. So they have specifically mentioned, question will tell you about the FCM 12%. So I have to bifurcate 12 versus 5%. That is 3 lakh versus 73,000, Aditya. Okay, 5-7 minutes break. Listen to a song, relax, come back. Yes, guys, are you back? Please confirm. Can I start? Can I show the new questions, guys? Okay. Ready? With the complete Josh? Okay. So, welcome back. Let's quickly start the work. Come on. Start doing quickly. Maintain the speed up. Also, answer parts are also there in one word. Everything is not MCQ. Last question 7. Do it. 6 and 7, do it. Let's start. How many of you were able to do all the questions? Tell me. Otherwise, your speed is lacking behind. Let's start. Okay, let's start. Ram Kumar, Hindu undivided family, an agriculturist. Yes, it is possible. It's an agriculturist. Unregistered supplies tobacco leaves directly to a registered manufacturer. Registered person. Okay. Who is going to pay the GST? What mechanism? Reverse charge is going to apply. Agriculture is selling to a registered person. RCM is going to apply. Okay. So here the answer is going to be C. Clear? Now pay attention. Who will issue the tax invoice in such case? If a tax invoice, in a tax invoice, if there is an RCM transaction by unregistered to registered person, self-invoicing applies. Section number 31(3)(f) applies. So tax invoice will be issued by the company which is the recipient, the Elite Tobacco Private Limited. Elite Tobacco Private Limited is going to issue the tax invoice. Do you know what is the time limit to issue this? The time limit is rule number 47A. Within 30 days. Within 30 days from the receipt of supply. What if the supplier agriculture is registered? Who will issue a tax invoice? If supplier is registered and it's an RCM transaction, then supplier will be issuing a tax invoice. That is Ram Kumar HUF. It will issue a tax invoice and it will declare a note. It will mention in the invoice with respect to the RCM applicability. If you carefully open your chapter number 9, tax invoices, particulars of tax invoice, one of the clauses is, one of the things to be mentioned is whether RCM is applicable or not. Many people get confused that if supplier is registered, it's an RCM, then self-invoice will apply. No, tax invoice will be by supplier only. Purement extracts, an unregistered person supplies peppermint oil mentha piperita to Cool Fresh Limited, a registered manufacturer of mint-based cosmetic. This is not of citrus fruit, so this will fall under RCM. And here the supplier doesn't need to be agriculturist. It doesn't need to be agriculturist because oil and these leaves are not grown. The person needs to be unregistered person. So here RCM is going to apply B. Here it doesn't need to be a registered, need to be an agriculturist. Okay. So here the question of this argument, the argument of this company stands wrong. Question number 3. Central Government Ministry of Railways sold old and used goods worth 45 lakh to Purana Mal Limited. Who is going to pay GST here? Have you marked C? Wrong. Answer is A. Railway Ministry is one of the exceptions. Railway Ministry is one of the exceptions for RCM. So regardless of the status, normally the law is central government apart from the Railway Ministry or state government or local authority, it is supplying old and used goods to registered person. In that case, we would be needing the status of the recipient, but otherwise not required. If it is a case of Railway Ministry, you don't need, FCM is going to apply. Next. I took a service of transportation of goods from Bablu, my friend who owns a truck. He did not issue consignment note. Pay attention to the analysis. If consignment note is not issued, it is not a case of GTA. So it is a case of transportation of goods by road, and this is not a GTA, this is not a courier, it is exempt. So here the answer will be exempt. Question number 4, exempt. Question number 5, can you try to answer me? Question number 5, can you try to answer? What is the solution? Tell me, what is the answer to question number 5? Yes. Okay, people are mentioning Keswani. Very good, Avasthi. Very good, Siddharth. And I think Saundarya has also given the correct answer. Answer is exempt. Sir, how come? Pay attention. Valimbe is selling goods to Keswani. This is a sale of goods transaction. Transport is done via good to GTA, who is unregistered. So FCM is not going to apply. Please pay attention to this point. Freight to be paid by Valimbe. No, pay attention. Freight is to be paid by Valimbe. When freight is paid by Valimbe, who is the recipient of GTA service? You have to pay attention to the recipient of GTA service. The recipient is the person liable to pay the freight, that is Valimbe. Now analyze the GTA exemption entry. GTA to unregistered individual. I am an individual, I am unregistered. Okay. See, Keswani is registered whereas Valimbe is not. So this is unregistered individual. An unregistered individual is not in the specified recipient list. Who is there in the specified recipient where the GTA is taxable? Factory, society, body corporate, partnership firm. They have not used the word business entity. They have used all other structures of the entity. Individual is not covered, HUF is not covered. So this will stand exempt. Had this been paid by Mr. Keswani, instead of me, had this been paid by Mr. Keswani, so Keswani is registered, the GTA service would have been taxable and RCM would have also applied. Had this been by, let's say, unregistered cooperative society, let's say GTA service is taken by unregistered cooperative society. Then also it would have been taxable under RCM. Please review the GTA exemption entry. The GTA exemption entry, first you have to see who are the recipients. Is it a cooperative society under law? Is it any factory or society, factory under law? Is it a body corporate? Is it a partnership firm, may or may not be registered because registration under Partnership Act is not mandatory. Is it a LLP? Is it a company? In all those cases, taxability is there. Same to same list is covered under RCM. So the only left out people is individual and HUF. Or unregistered CTP. CTP can also be registered or unregistered. The factory, let's say factory or a company, let's say it is incorporated yesterday and today I am taking a GTA service. RCM will apply mandatory registration under RCM. Question number 6. A shop in mall means it's a commercial property. It is rented by unregistered person to Mota Bhai registered person under composition scheme. Who will pay GST? Pay attention. In commercial property, unregistered to registered. First of all, is there any exemption? No exemption analysis. No entry of exemption exists. Unregistered to registered falls under RCM. But there is an exception. Except composition. And here it is registered under composition. hence no GST. Don't call it exempt. Exempt means section 2 clause 47. Say no GST. Say not taxable. Don't use the word exempt. Exempt I've defined section 2 clause 47. You're a tax professional now. Please use the words very carefully. Does it matter if instead of Motabai it was a company? No, it does not matter. Any person composition excluded. No change in answer. Vasuli Bhai. He's a character in a Golmaal series Hindi movie. Okay. So Vasuli Bhai is a recovery agent. Provided recovery service to Oswald trader to recover a long due debt. Who will pay GST? Sir, recovery agent is RCM. No, recovery agent is RCM when the recipient is a bank or financial institution. NBFC. Here the recipient is Oswald Traders, not a bank. FCM will apply. Tested in your November 24 examination. Clear? Is it clear? So GTA part, I think you should be reviewing it. Okay, GTA part you should be reviewing it. Answers everywhere I have mentioned. Now this PDF along with chapter 1 cumulative I will update it today. So every day it will be updated. At the end you can take a print. Now I want to do a certain touch up of some parts. Just a certain touch up. Most of the points I have covered through questions. Okay. You know the matter of import of goods is handed over to the customs law, except online money gaming. Online money gaming, because it is not a physical import, it is an intangible import, the taxation will happen under the GST law only. 9.4 is a real estate related RCM. These limits, I'm not expecting this to be very much tested in the exam, but you have to do it. It is only for the real estate industry. This goods related entries, very important for your exam. And please pay attention. For example, silk yarn. I am using the word manufacturer. This manufacturer may or may not be registered. Tomorrow it can be registered company. But if it is a manufacturer of silk yarn selling to registered person, RCM will apply. So please pay attention to the status of the reason, or I can say pay attention to the reason of RCM. If I am using the word manufacturer, all other attributes I am going to ignore. If I am using the word body corporate, registered, unregistered, I am going to ignore. Okay. GTA part I have told you a couple of times. Please do it carefully. All these people that they have mentioned in the RCM list are exactly those people who are mentioned in the exemption list also. That there the exemption does not apply, and now RCM also is going to apply. And pay attention to the meaning of word recipient. Before analyzing the GTA service, you have to see recipient. Recipient means A selling to B. Pay attention who is paying the freight. Person liable to pay the freight. I am linking this to the definition of recipient, section 2 clause 93. In non-applicability, one of the entries, non-applicability of RCM means when I talk about FCM. So non-applicability of RCM, one entry is that the recipients are registered solely for TDS. This is not relevant today because this stands exempt in entry 21B. Chapter number 4, this is currently exempt, so this won't be asked. This I have told you. In FCM, GT has an option 12% or 5% question will status. But if it is RCM, 100% 5%. Beyond that, if it is FCM, regardless of it is FCM or RCM, for recipient, ITC. For recipient, it is going to be under ITC. Sponsorship I have covered. Government, please don't worry. I am going to cover one super chart while I cover exemptions. Import of service is RCM except OIDAR. OIDAR means NTOR, non-taxable online recipient, taking the importation of OIDAR service, for which FCM applies. That we cover in the place of supply section number 14. Okay, place of supply section number 14 IGST. But apart from OIDAR, any other service you are importing RCM, provided it is not for any personal purposes, otherwise exempt. So if it is exempt under chapter number 4, RCM FCM question will not arise. Sir, why don't you say this point when you cover RCM of goods? Because exemption of goods is not in our course, but exemption of service is in our course. Certain points to be noted with respect to the RCM. Please pay attention. If I am a recipient, I fall under the RCM liability, then regardless that I am unregistered, I will have to take mandatory registration under section 24. I will have to take mandatory registration under section number 24. Second point, the RCM liability, whatever is your RCM liability, you have to pay it in cash. You have to pay this amount in cash and then take ITC, because it is an inward supply. But you cannot pay it via ITC. Why? Why do I need to pay it in cash? Because it is my inward supply, and ITC is used to pay output tax. This is my input tax. So you pay in cash and you take ITC. Said next, if my outward supply is under RCM, if my outward supply is under reverse charge mechanism, will I get ITC? No. Outward RCM supply is considered as exempt for the purpose of rule number 42 ITC chapter. So no ITC. And apply logic. If it is exempt, how will I use my ITC? Or if it is under RCM, how will I use up my ITC? The recipient is going to pay the tax. So there is no use of ITC. I'm not going to get ITC. Composition, I think most of the points I have covered. Okay, just a couple of things. There is a list for composition scheme that you remember. Ice cream, pan masala, tobacco. In the batch, what we used to learn is, these are all the things that your parents, your mom used to say that please stay away from these things. Don't eat these kind of things, pan masala, tobacco, cold drink, aerated waters, ice cream. You will have a sore throat, edible ice. So just a small learning kind of a thing that students are given in the batch. And last, while walking, pay attention. A brick should not fall on your head. So it's a simple, very different kind of a learning mechanism. These goods that are not allowed, these are not allowed from the point of manufacturing. Trading is allowed. Trading is allowed, okay? Pay attention. Composition trading is allowed. Manufacturing is not allowed. One point to be noted. If I'm a new registration, I'm taking a new registration, let's say in the middle of a year. I can go for composition scheme right from my first day. I can go under composition scheme right from my first day. But if I'm an existing registered person and now I want to go under the composition scheme, I have to wait for the financial year end. By 31st March, I have to apply. And from 1st April, I can enter the composition scheme. Vital difference. Withdrawal related also provisions exist. But those are a little here and there, a lot of ifs and buts are there. You can read it. But this is something that you need to make a note of while availing the composition scheme. Is it clear? Is it clear? Last part of the day. Guys, last part for the day. Although I had a couple of things more planned, but I will cover that during exemption. I told you, chapter 2 has to be linked with exemption. So I had planned a lot of more things, but we will do it in the exemptions chapter. But one thing I want to do it right now. I will give you 2 minutes. I want you to make a flow chart with respect to the property on rent. And I want you to link exemption with RCM FCM. I will give you the structure. You have to fill in the blanks. Please do it. This is the main entry exemption. This is with respect to the PG, camps, hostels. So I have given you the hints of how to make the flowchart. I want you to make it right now. Right now, not at home, right now. Please do it. Link RCM, FCM along with the exemptions. You don't want to learn the entry, it's okay. Entry number is irrelevant. This is about PG, camps, and this is others. Okay. Done? Avasthi. Okay. Pay attention. If it's first of all, tell me what is the basic exemption? Exemption is with respect to the residential property. It is for residential use, and the recipient should be unregistered person. If it is not an unregistered person, let's say it's a registered recipient, then also you can get the exemption benefit, provided it is a sole proprietor taking it for personal purpose. Nothing else. For commercial property, there is no exemption whatsoever. So let's start the thinking. Residential property, condition number 1 fulfilled. Commercial use, condition not fulfilled. So here your exemption is gone. Tax is going to be applied. Now pay attention, please. Commercial use tax will be there if recipient is registered or recipient is unregistered. Were you able to spot the difference? Were you able to make the difference? That if recipient is registered, RCM, unregistered, FCM. Were you able to make this? If recipient is registered, because if you see the RCM, FCM entry, if you see the RCM and FCM entry, With respect to the residential property, they have not mentioned the use, they have just talked about the status. Residential property to registered person. Use does not matter here. Use have analyzed for exemption. Once the exemption is gone, I talked about the residential property, registered person. Supplier is irrelevant. Supplier is irrelevant. Now pay attention. This will go under the RCM. Now someone is asking, what if supplier is registered? I don't care. Supplier can be registered. Supplier is irrelevant here. But if supplier is unregistered, if the recipient is unregistered, FCM will apply. When I say FCM will apply, guys, pay attention, very important part coming in. Will actual GST be applied? Will GST be actually applied? Depends on whether supplier is registered or not. See, my work of RCM chapter is to tell whether RCM will apply or not. So when I say FCM, the main point I am stressing upon is RCM is not going to be applied. But in reality, will GST be applied or not? That depends whether the supplier is crossing the limit and is registered under GST or not. So simple example, private coaching, RCM is not applicable, FCM is applicable, but actual GST will be applied if I am crossing the 20 lakh limit and I am charging GST from you. Yes or no? This is how you need to code this. Okay, so if supplier is registered, then yes, GST will be applied. If unregistered, then no GST. This has been tested in the paper in the context of security personal entry. We will cover that in ITC also. Now, with respect to residential use, if it is a case of others, others means normal flat given to a family. You will see whether the recipient is registered or unregistered. If recipient is registered, you see whether it is a case of sole proprietor or others. Tax. Sole proprietor, if he is able to satisfy that condition, okay, pay attention. If he is able to satisfy that condition, then exempt. But let's say it's a normal company, then tax will be applicable and it will be under RCM because recipient is registered. You cannot learn everything. You have to apply stepwise logic. Is this clear? Okay, this actually I have combined both the things here only, recipient registered or this is unregistered. So even if you apply the same thing here, that if the recipient is unregistered, then there is no analysis further, it's exempt. All the conditions are complied. This will apply same like this. If it is a PG or CAMS case, hostels, what are the two conditions you have applied? Tell me. What are the two conditions you have applied for exemption entry? Two conditions. Tell me very quickly. One is with respect to the rent and one is with respect to the stay. Guru is saying 7,500. What? There is no 7,500 limit here. Correct. Minimum stay of 90 continuous days. And second, you are not earning much, means you are collecting rent of 20,000 per person per month. If both of these conditions are satisfied, exempt. If not, tax. And generally, since the recipient would be students, unregistered people, FCM. But whether actual GST will be applied or not, we have to check whether the supplier is registered. And what with respect to the commercial property? 4 or 5 cases possible. Registered to registered, registered to unregistered, unregistered to unregistered, unregistered to registered. Pay attention. Registered to registered, normal tax, FCM. Registered to unregistered, normal tax, FCM. Unregistered to unregistered, no tax. Unregistered to registered, I have to further classify it again. I have to further classify it again, whether it's a composition person or it's a regular. Regular RCM, composition no tax. This will create a proper structure. I guarantee you ICA question is not going to go beyond this. Sir, why didn't you analyze any analysis of exemption, guys? Commercial property, no exemption. Commercial property, no exemption. Only for residential property. Sir, can we revise this? The chart is already ready in your hand notes. I have already made the chart. I will give you proper neat and clean chart. I will give you some time. Take 1 minute, revise this completely. And please confirm me once done, and are you feeling confident or not? Please do it. Yes, Mala, I have written it. Just read everyone. All your queries will be resolved. This is the master chart for property on rent. Done? Pay attention here. Pay attention here. If a residential property is given for residential use to ICICI Bank registered for the stay of its MD, it will be taxable. Why? 3 conditions. Residential property, okay. Residential use, okay. But the bank is paying the rent, which is registered. It could have still it could have still enjoyed the exemption had it been a sole proprietor case, which is not there. So it would be taxable and it will be under RCM since the recipient is registered. If the bank was unregistered, it would have been exempt because it would be unregistered person taking the rent. So focus is on who is paying the rent. In the MCQs, they give that who is entering the agreement for the rent, company or the employee. Pay attention because that person will be the recipient. Or another question, residential property given to a doctor to run his clinic. Doctor may be unregistered, I don't care, but purpose is commercial. Tax. Now whether RCM or FCM? If doctor is registered RCM, otherwise FCM. Because please note that the RCM FCM analysis does not matter. It does not take into consideration the purpose. It does not take into the consideration the supplier status. It only considers the fact that it's a residential property, the fact that whether it is recipient registered or not. Recipient status matters. I'm talking about the residential dwelling. But for commercial property, it does matter it is unregistered to registered or not, except composition scheme. Next question, last. Example I have given. Please tell me how much GST would be applicable. Just do this example. Correct, Samir. Now you are getting the analysis. Strong Guys Limited, unregistered, provided security personal to Masoom Limited. Masoom in Hindi means innocent. Okay. Worth 1 lakh, GST 18%. How much GST? First analyze RCM or FCM. Pay attention. Security personal. If RCM entry is what? Other than body corporate. Here it is a body corporate. So this is going to be under FCM. Wrong. It is under FCM. Now I told you in FCM, will actual GST be applicable? Depends upon the status. Unregistered person, maybe his supply is not exceeding 20 lakhs. So no GST, no ITC. This was tested in your ITC question. No ITC. Wrong, wrong, wrong. Whosoever is saying 18,000, wrong. No GST. Because guys, see, FCM means RCM will not apply. But whether actual GST be involved depends. Whether the supplier is actually registered in GST, his turnover is crossing the threshold or not. So no ITC for me also. No ITC for recipient. This was tested in your ITC. Metal scraps, a short summary. Metal scrap, a short summary. You know, in metal scrap, there is a RCM applicability. Unregistered to registered, there is an RCM applicability. Pay attention. Unregistered to unregistered, no GST. Unregistered to registered, it is under RCM. And registered to anyone, FCM. So only RCM is when unregistered to registered. Okay. And TDS is when registered to registered. So RCM and TDS both are applicable for metal scrap. For metal scrap, the TDS is when it is registered to registered. So in this case, the TDS would also be applicable if recipient is registered. Balance ones we will cover maybe tomorrow or during the exemption. This was all from my side. I tried my level best to compile a lot of things together. Some more charts are yet to be covered. Samir, BCBF, I have already made a master chart example for you guys. I have already made it. I will cover that during chapter number 4. Okay? Don't worry. Legal services also will be covering during chapter number 4. Balance, if you want at home, you want to read it, you can do it. I will upload the hand notes today itself in the application. I hope you are feeling a little more confident on analysis part of chapter number 2. Yes. Right? So from tomorrow, the class will be only and only on our application, not on the YouTube. Right? So please revise the chapter well today. I really hope you enjoyed the session. Tomorrow the target is place of supply. And then we will come back to exemption, some parts linked with chapter number 2. Tomorrow will be place of supply. Okay? Yes, Harshvardhan. Yes, it is same. Security personnel you are giving the people for security, security agency, that is same. It does not cover me directly giving security or PSO service. I'm providing people for security. Okay. Bye bye. Take care. Bye bye. Have a good day.